What's up, everybody? It's James. So today we're going to be talking about the 12-month bank statement loan, everything you need to know about it. And in this video, we're going to be discussing about how does the bank statement loan for self-employed borrower work, right? We're going to talk about some of the guideline of the 12-month bank statement loan. We're going to talk about some of the requirement for this. We're going to be talking about you know some of the benefits of a 12-month bank statement loan. We're going to talk about some of the guidelines, credit score requirement, minimum, pretty much the benefit and pretty much the con. So the pros and the con of the 12-month bank statement program. So we're going to be discussing all that stuff and how you can take advantage of it if you're self-employed to buy a home. Okay. So a 12-month bank statement program, it's really for self-employed borrower who aren't really qualified for a traditional lending route, right? For example, the reason why this mortgage or this loan program is so beneficial is because a lot of times being self-employed, we write off a lot of stuff, all right? We write off all this, depreciations, business expense, and it shows on our tax record that we're not making any money. So with a 12-month bank statement loan, all the lender looks at is they look at your bank statement, which is how much money is coming in every single month, and then they average it out for the last 12 months, and they'll use that as income for your ability to purchase a home. Okay, so that's pretty much it on terms of what is a 12-month bank statement loan. It's sometimes the bank statement, the 12-month bank statement loan is a little bit more, it costs a little bit more, meaning that you pay a little bit more interest, but it's very beneficial for you in the longer run if you want to get into something immediately, right? So, we'll break down the down payment requirements, the credit score, and what is it that the pretty much the lender are looking for in terms of determining if you're qualified for a 12-month bank statement loan. Okay, so yeah, so really good program out there for self-employed. A lot of our clients who are real estate agents, truck drivers, high earning 1099 attorneys, 1099 workers, like just self-employed workers, right? Mortgage lenders, pretty much everybody who receive a 1099 in their business would be really good fit for this type of loan. All right. So some of the guidelines. So what are some of the guidelines that the lender use to be determined how much you'll be able to qualify for? And being able to know this stuff will help you determine if you're going to qualify for a 12-month bank statement loan or not. Okay. So one other thing is that you need to have some type of credit, right? You need to have some type of credit, and it doesn't have to be high. It just has to be established, okay, for at least 24 months. And then you need to show that you've been making, rent payments or, house payment for the last, 24 months. These are some of the documents that the lender would require. It's just additional documents. But really, the main requirement for this loan program is, one, you have to be self-employed. Two, the income that you're bringing in from your business and for your company, basically it's 12 months bank statement. So basically whatever income that you're bringing in within the last 12 months is average it out for the last 12 months, and then you use that as your income. Okay. And normally debt to income for that is between 50 to 45, depending on the type of lender. Okay, so let's just say hypothetically you make about $10,000 a month, and then half of that $10,000 for the last, it's basically $10,000 a month for the last 12 months, right? So half of that is used as income, right, for your mortgage. So $5,000 is used for income, and then if you do just quick math, $5,000 divided by 50 times 10,000, right? That will give you roughly on what is it that you're kind of approved for in terms of like your monthly payment, which is equivalent to $1 million roughly, all right, in terms of purchasing price. So you can afford up to $1 million, and then you subtract taxes and escrows and all that stuff. So you're with that amount, you'll probably be able to qualify for, I would say, 800,000 to 900,000, just by basic math. Very rough estimate, okay? And everything in this, just deposit counts only. We don't count, they don't count transfer fees or pretty much paying off debts or whatever, right? It's just really just deposit in the bank, okay? They don't really care about like, well, they do care about like, if you have overdrafts within the last 12 months, but it's not a huge requirement, all right? So anyways, so other requirement, for example, for the 12-month bank statement loan is if you have a higher debt and if you have, a lower credit score, sometimes the lender would require a higher down payment, right? So down payment can range between 10 to 30% depending on your risk factor, okay? The more riskier you are, meaning the higher debt, right? The higher credit score that you are, the more that the down payment is required, okay? The maximum amount of loan, some banks and some lender required, can lend up to, $1 million, and some lender required a maximum of, $3 million. It really depends on the lender, and if it's above a certain amount of minimum or maximum that these lender allowed, then a lot of times these loans has to be underwritten, okay, by their lender, okay. So who would be really who would be beneficial for this type of loan? So again, anybody that exceed like non-conforming loan limits, like for example, right now the loan limits for just certain city, like in California, like in a non like major developed city, is the max that you can borrow for a conventional loan is 650,000, right? Here in Fresno, California. So if you are looking to buy $1 million property, you don't want to exceed that amount. And if you exceed that amount, that is considered as a jumbo loan. Better route would be just go through a self-employed, 12-month QM loan, right? Non-QM loan, okay? So again, right, self-employed borrower, people that shows that they're not making any money on taxes, okay? So those are really good things that you need to know about, the 12-month bank statement loan, okay? So how does the underwriting process work? It's pretty simple. They just pretty much calculate all the income that you make, and then they'll ask you some of the assets that you have currently, just to reduce their risk, right? So in the event that they want a borrower, and they want to reduce their risk. So because what they're doing is they're selling these lending program, which is backed by real estate, to institutional investors that they want that secured dividend, right? They want that monthly interest, okay? So what are the minimum credit requirement? So the minimum credit requirement is about a 500 FICO score. But remember, the lower the credit score, the FICO credit score, the higher down payment you have to make, right? So if you have 500, most likely you have to pay around 20% down payment. And then if you have a 720, right, you can qualify for a 10% down payment using just a 720 FICO score, all right? And then if you have a 620 FICO score, then the minimum requirement is a 20% down, okay? So how long does a borrower need in order for them? Well, how long in business does a borrower need to be in order for them to qualify for this? So they need to be in business for at least 2 years, right? They need to show that they've been self-employed for 2 years, and in order for the lender to verify that is either their taxes, right? Their last tax date that they filed for 1099, or just any kind of proof that they've been in business for a minimum of 2 years, okay? So that's pretty much it for like the 12-month bank statement program. It's really good. Once you get into the 12-month bank statement program, the uh, the most important thing is that you get into a home, right? You secured a home, and then from there, within the next 6 months or so, what you can do is you can refinance yourself into a lower mortgage rate. So and then that way you can save a ton of money in terms of instead of paying about 1.5% more versus the traditional route, you're gonna be paying, you'll be able to refinance it and get a lower rate after that. So, anyways, hopefully this video helped you guys. Peace and love, guys. This is James with the Pham Real Estate signing out.